Today in the stock market, we tested new 52-week lows in the S&P 500, the NASDAQ, and the Dow Jones Industrial Average. As a matter of fact, the S&P 500 fell as low as $360.87 today at around 12:20 p.m. I've actually been buying into this dip, but I do know that all the pain in the market has been causing a lot of fear, and it could obviously continue going lower. Now, I'd like to discuss some of this though, because the PE ratio of the S&P 500 is actually under 20 now, which means that we're no longer overvalued and we're starting to push into the fair valuation area. A fair value for the S&P 500 is probably around $350 per share, which would put it at a PE ratio of approximately 18. So that's another price level that I'm going to be looking at in the near term. And I would like to point out another thing is that the S&P 500 SPY ETF now has a dividend yield of 1.5%. This is the highest that yield has been in a long time. So I'm actually quite excited about that, and it's another incentive to start buying into this dip. So I'm actually going to take a minute to explain to you guys dividend yield, because I think it's an important concept that you guys understand about buying into these dips to take advantage of higher dividend yield opportunities. All right, so I'm actually going to do an example here. So the S&P 500 was at a height of around $470 per share, and it paid about 1% dividend. Now, the S&P 500 is about $363, and it pays 1.5%. So the dividend yield had climbed from 1% to 1.5%. So as we can see, that's quite a jump there in the dividend yield, which is making it a more attractive buy. First of all, you're getting a discount of about 25%. And second of all, you're going to be seeing even more dividend yield simply for holding the stock and doing nothing about it. That right there is a bargain that I'm interested in taking advantage of. So now we're going to move on to look at some of the events in the marketplace tomorrow. So tomorrow, Wednesday, we're going to be seeing several different important events going on, including Jerome Powell doing another speech. This could be a very significant thing for the market simply because of the fact that he has such influence over the market nowadays. So I do expect to see some volatility tomorrow, especially as the hurricane approaches my hometown, which is in Florida right now. Look at that. The path of the hurricane is going right by Sarasota, which is exactly where I live. Category 4. It's definitely going to be something, guys. But one thing that I'm kind of wondering is what could this mean for a stock like Home Depot, where everyone's going to buy hurricane supplies at and all these different materials? This could be a good thing for Home Depot stock, right? Let's take a look. Here's the Home Depot stock price since the year 2018 compared to the S&P 500, which is this blue line. So it has been beating it by a pretty good margin. As you can see, it also pays dividends, so it makes it even more worth it to buy. However, short term, well, it's also beating the S&P, which perhaps that could be from the hurricane sales. And I do think that we might see higher than normal earnings for Home Depot this quarter, but I don't think it's going to make quite a difference in the stock price because hurricanes are quite normal events here in Florida, and it just isn't going to make too much of a difference to the stock, in my opinion. But it could, don't get me wrong. So one thing that I do like about Home Depot is that their dividend yield just happens to be way, way better than anything that I've seen in a while. Let me show you. Look at that. 2.8%. They pay $7.60 per share on an annual basis, which is very impressive. Another thing is that their PE ratio just happens to be even lower than that of the S&P 500, which is putting them at a very, very good price. Beta, which is their volatility compared to the market, just happens to be less than 1, which is another cool factor to look into. And also their 1-year target price, which is given by analysts, is expected to be $353, which is quite an impressive jump from where it's currently at. And another company that I'm very interested in is Disney. It's very discounted right now, and that's one of the things that I'm interested in looking into. Now, don't get me wrong, this PE ratio is not the most impressive thing that I've ever seen, but it is lower than it has been. As a matter of fact, we'll look at that really quick. Their PE ratio in the past was 272. That's worse than Tesla, by the way. That was way too high. It's finally starting to approach where it should be, but I mean, it's still a ways out. That's one negative factor to it. And it is more volatile than the market, but it is very cheap compared to where it's been. Look at a 5-year chart. It was 186 and now it's 95. So Not gonna lie, it's a pretty tempting offer, even though it's still considered overvalued. Let me know what you guys think about Disney stock. Make sure that you like and subscribe, and I'll see you guys on the next video.